So institutional trading levels or zones for currency pairs, So we have 0 to 80, 80 pips. We have 0 to 20, 20 pips, 20 to 50, 30 pips, 50 to 80. Those are 30 pips. So these are institutional levels, intraday trading levels the institutions use. Now, another type of support and resistance is what we call the institutional levels. Now, these institutional levels are price levels where the institutions open and close their positions. So these institutional levels, when we are trading, the banks and other big institutions tend to look at these levels to open and close their positions. And how do we come up with these levels? So these are the institutional levels. We have the 00 level, then we have the 20 level, we have the 50 level, we then have the 80 level. If you remember psychological numbers, these are the levels, or we shall call them intraday levels. Intraday trading levels. So these are intraday trading levels. When these banks are trading, they use these intraday trading levels, price range target from 00 level to 8 level. These are 80 pips. And also from 0 to 20, if you see from 0 to 20, these are 20 pips. From 20 to 50, these are 30 pips. Okay, let me put this here. Then from 0 to 80, these are 80 pips to here. These are 80 pips. And then from 0 to 20, those are 20 pips. 20 pips. These are 20 pips. From here to here, 20 pips. And from 20 to 50, those are 30 pips. These are 30 pips. These ones. And 80, from 50 to 80, those are 30 pips. So these are intraday institutional trading levels, 30 pips. So these are the levels the banks use to buy and sell on the daily for currencies. Institutional trading levels here for currency pairs, not on other instruments. We are saying currency pairs. How do we come up with these levels? You come to your chart and look at where price is. Let's say 00, we give it yellow, 00 yellow. Then 20 level, we give it green. And then 50 level, we give it red. Then the 8 level, we give it white. Then okay, so these are the levels we are going to use to come up with the intraday trading levels for us to trade. So we say you come and put your line next to where price is. if you look at this, right now price is at 1.13966. So I will say 1.13966. So I will have 1.3 if we take 1.40. So the next level to this is 1.400. Click OK. This is the level. So we say the 00, we shall give it the yellow. We give it the yellow. This is the yellow line. So we also get another line. We put it here. We give it, so the number above this 1.1400 is 1.14. The institutional number is 20. We plot it. So this one, we said we shall give it the green color. That is the 20 level. We also get another number here. We give it 1 point. Next to where price is 1.1550. Next to this level 0.13, 1.1400, 1.1420. Okay, so we have 1.1450. Then we have 1.1480, but we said the 8 level, we give it white. 8 level is white, and this one is red. We also have another level, which is the 1 point to be 1.1500, 1.1500, from 1.4148 to 1.1500. And this is yellow because we said then we come to, we plot another level, bring the level. This is 1.1520, but give it green color. So give it green. So institutional trading levels or zones for currency pairs, So we have 0 to 80, 80 pips. We have 0 to 20, 20 pips, 20 to 50, 30 pips, 50 to 80. Those are 30 pips. So these are institutional levels, intraday trading levels the institutions use. We come, we plot 1.1550. Okay, 50 level, we said it's red. This is red. And then you have white with coordinates of 1.1580. Click OK, and so on and so forth. Then here we come, where price is trading right now. So the number below, if we follow the same system, we said, so if we are to get a number below 1.14, where price is right now is at 1.1397. So the institutional level between 1.1397 and the next level is 1.1397 to be 1.1380. We mark that, and this, we said this will be white because this is 8 level. So we get another level, we put here 1.1350. We mark it, and we say this will be the red because it is the 50 level. Put OK. Then we come to this, we mark it, which is the 20 level, 1.320, and we said the 20 level is green, so we give it green. Say OK. So these are the institutional levels. 00 is the yellow color, 20 is, because here 20 is the green color here, 50 is the red color, and 80 is the white. Then we again go to 00, 20, 50, 80. 00, 20, 50, 80. This is the daily time frame. But we want to go to the lower time frames. If we come to the daily time frame, this is what you're going to have here. This is the daily time frame. So you see, price is respecting these levels. You don't see any candle close below here. You don't see any candle close above. Here, the same thing applies. You're seeing wicks rejecting the 50 level. You see price comes into the 8 level. You did not see a candle close below it. So this is the daily time frame. Look at how price is rejecting these levels. So let's go to the 1 hour time frame. 1 hour time frame. So this is the 1 hour. 1 hour. See, if we start from this side, price is rejecting these levels. Look at these wicks. We said wicks show rejection. Wicks showing rejection. Rejection here. Again, price showing rejection here. This is price came and came down, but it later on went back. Look at this. Price is rejecting the level. The same thing applies to this here. The level holds. The same thing applies to this. If you look at these rejections here, the market is rejecting, going up, the level holds, institutional levels. If we come here, price broke below, and then here price respected the wicks. We have wicks, and if you remember the meaning of wicks, rejections, the same thing applies to this here. We have a lot of rejections. Price comes, tries to, it stays here for a lot of time, choppy. Rejections, price respecting these levels. Look at these choppy moves. Now, right now, as I talk, price is going to this level, the institutional level here, which is the 0 level here. So these levels, if we look up here, you have rejection. You have rejections, price is rejecting. Here, price rejects. The same thing applies to this rejection. Now, this is not enough for you to see, but let's go to the 15 minutes time frame. As we said, intraday trading levels. Don't mark these levels and rely on them on the higher time frame. If you look here, what happened? Price came to this level. This is the 8 level. Price respected the 8 level, and what happens? It traded away from the 8 level. It traded away. It's now going to the 0 level here. See, look at this candle, how it is rejecting 0 level. Then, if you look backwards, we have price. Look at this. The market opened. This was a gap. If you remember gap ups and gap downs, price gapped from here to this level. Which level is this? This is the institutional level. Here, this is a gap. Price gapped down. This is institutional level. If you remember the knowledge of gaps, price gaps from down here, from up here into this level, institutional level, the 0 level. Why did price not gap up? It gapped down into the institutional level. We see there is this one here. Price respects institutional level. Look at these weeks, rejection, institutional level. Here, the same thing, price sells, institutional level. So if we look here, this institutional level, this is the 20 level. The same thing applies to these ones. Look at these rejections. Why don't we have candle closing above here? Rejections, institutional level. Here, this one, price is rejecting. Wicks, what do wicks tell you? Rejection. Institutional levels. Here, look at this. You have here, you again have here, you have here. These are institutional levels. Institutional levels for intraday trading. Here, see price rejected this one. Wicks, rejection, institutional level. Here you have price traded away. Look at this one here. You have Wicks, institutional levels, intraday institutional trading levels. These are intraday trading levels. See this? Rejection. So there is a secret behind these levels, especially to you who is an intraday trader. Why do you think price moved from here to here? Why do you think price moved from here to here and it rested? From here, price again moves up. Now let's measure these pips here. Let's measure the pips. Let's get our pip range here, our price range calculator. Price moves from here to here. How many pips are these? These are 20 pips. These are 20 pips. Let me say from here to here. These are 20 pips. Price rests. Again from here to here. Price moves 20 pips. It rests. From there, price sells. Here. It rests. How many pips? 20 pips. We then have price. We have price trade from here to here. 30 pips. It rests. Which level is this? 8 level to 00 level. It rests. Intraday trading levels. Price trades from there to here. 20 pips. It rests. So there is a lot behind these levels. You who is an intraday trader, 20 pips, price rests. Again here, 20 pips, price went into a rest. It rested, it consolidated. It traded away from here to here. How many pips? 20 pips. Here, 30 pips, price rested. The same thing applies to these other levels. For price to go and it breaks and it goes, let's say, to these many pips, these are news. But if you do a lot of research, you will see price trends from this level to this other level. It rests here to here, 40 pips. And if we come back to our pips, we said we have from 00 to, we have from 00 to 20, these are 20 pips. 20 to 50, these are 30 pips. 50 to 80, these are again 30 pips. 00 to 80, these are 80 pips. So when you come back to these charts and try to look for a price range where the market dropped for more than 100 pips in a session, it may take you time to see. It is rare. It does happen, but it is rare. Look at, this is live. We are trading live right now. So this is a 00 level, and you can see how price is reacting on the level. So guys, go and look for these institutional levels. Mark the institutional levels. If you're an intraday trader, target from here to here, and you will see that when the market has moved from 8 level, it goes to the 00 level, it will take a rest. These are 20 pips, and you can see the reaction of what is taking place at this 0, 0 level. Go check your charts